What up, guys? This is Kelvin, and welcome back to my channel where we discuss financial wellness, mindset therapy, and real estate. In today's video, what we're going to be discussing is transportation industry funding. Yes, if you're a trucker and you run a logistics business, then this is the video for you, because if you've been looking to expand your business, buy some more trucks, or even get working capital for day-to-day expenses, you cannot miss out. I got you. Stay tuned. All right, guys, as you know, this channel is all about giving you those precision cut gems that you can share with like-minded individuals. It's never too late to strive to be great so that we can all be self-paid in the shade, baby. You already know what time it is. So I'm gonna start this video with some good news. There is still plenty time for you to schedule your one-on-one business coaching session with myself, where we discuss where you are today and then give you the next steps, which is going to be your blueprint for success. During these one-on-one business coaching calls, I have been able to help a lot of entrepreneurs and small business owners figure out the necessary steps it's going to take to get them to the promised land, to the finish line. Whatever your goal is with business credit, I want to be the person that helps you get there. The link is in the description below, so go ahead and book your session today. So the first thing I want to discuss is the elephant in the room. You know how we do on this channel. We jump right into it. So why is it so darn hard to get funding in the transportation industry? Well, the number one reason why is because the transportation industry itself is considered to be high risk. You may ask why? Why is it considered high risk? Why do lenders, look at us a certain way, right? Well, at the end of the day, it has a lot to do with the state of the supply chain and, most importantly, fuel prices, right? Right now, we are in unprecedented times. There are tons of truckers on the road, but as you guys know, as the fuel prices increase, things, it gets a little scarce, right? Things begin to cost a lot more. You understand that the profit margins are starting to look a little different. So this is one of the reasons why lenders tend to hesitate when lending to the transportation industry. But of course, outside of fuel, one of the other reasons is also driver shortages, right? Lenders also understand that it may be tough to find a good driver nowadays, and this is something that they use in their logic to decide what industries they want to lend to. Now, another one is going to be, of course, delayed payments, right? So as you guys know, you can wait 1, 2, or even 3 months to receive payments, and this could be another reason why it can be tough to receive your traditional business funding. Another reason maybe that when you apply for funding, you don't really have clear and concise business plans. Whether you're looking for working capital, if you're looking to expand by adding to your fleet, when you apply for these loans with traditional banks or credit unions, they're gonna wanna know, what is your business plan? Okay, you're looking to get a truck, you're looking to add a truck to your fleet, but which jobs are you looking to pick up? Where are you looking to operate? So you do want to make sure you do your due diligence, take your time, get a real mission statement, and write down a good business plan just in case you need it. And the last reason why it can be hard for you to get funding in the transportation industry is because you have too many existing loans and bad debt. Now, most people in the transportation industry finance their vehicles, right? Well, when you first get started, if you finance too many, well, when you try to get another, they will notice that you have a lot of existing debt, and they may prefer that you pay off the trucks that you have now, or pay off the business loans or lines of credit that you have open before they extend their hand again. So not a big deal, but of course, just continue to pay off those loans, because it can be easy to just say, okay, cool, I got my trucks, I'm ready to go. You get excited, and then you only making the minimum payment on those loans. So make sure that your focus is to pay off that debt so that you can re-up and continue to expand your fleet. But I got some good news for you. I'm not going to just throw that stuff out there. I say it because there are alternative options, alternative funding options out there, and we will be discussing a high approval rate option, well, actually 3 of them, with my partners. As you know, I am the owner of Greenscale, also known as GSC Funding and also Greenscale Credit. So GSC Funding is partnered with the awesome guys at Rock Financial. And with Rock Financial, we've been able to successfully fund hundreds of businesses, and we're talking over $1 million worth of funding. Now, us at GSC Funding, it is our goal that by the end of 2022, we want to have personally helped fund over $1 million worth of funding to all small businesses, no matter what industry you're in. Now, let me tell you about 3 different options that have high approval rates that you can take advantage of right now. Now, this is a fair warning. I want you to go ahead and get out a pad or pen, go ahead and write these requirements down, because if you meet at least one of the requirements for each of these, I think it's a great idea for you to apply. And you already know the links will be where? In the description below. Now, your first option is going to be equipment financing. So equipment financing allows you to finance the vehicle so that you can take your time and make monthly payments instead of using all of your business's cash to purchase a vehicle. Now, the approvals for equipment financing are heavily based on your consumer credit profile. So you don't need to have excellent credit, but of course, the better your credit, the better your funding terms will be. If you need help with your personal credit, I invite you to go ahead and schedule a free credit repair consultation. The link is in the description below. I would love to help you improve your personal credit profile so we can go ahead and get rid of that dark cloud that's hanging over your head. Now, with equipment financing, there is 2 different ways you can do it. You can do it with a lease, and you can do it by just financing the whole vehicle. Now, of course, we know what leasing is versus purchasing, so you will want to do the research and make a decision on what makes the most sense for you. Do you want to borrow this vehicle for a few years, or do you want to own it long term? But regardless, this is a good option for you because you don't want to come out of pocket and use your own cash when you can use what? OPM, which is other people's money. This is important because when you use the bank's money versus your own, this frees up working capital that you can use for your day-to-day expenses. Now, one thing about equipment financing is you can end up doing this and get a 1 to 5 year term, right? So meaning 5 is gonna be the average longest term you can get, but all you need is a minimum 580 credit score. That's it. Now, if you have only a 580 or 600 or you are in the low 600s, I'm going to be honest, they are going to want to see that you have positive cash flow. How much so? I would say on average, about $10,000 to $15,000 worth of deposits in your business checking account. So that does mean the first requirement is that you have a business checking account. And then if you have over a 580 credit score, then you're going to want to have, now I'm going to go ahead and break it down for you, but one of these next 2 things you absolutely have to have. Now, if you've been in business more than 2 years, you don't have to worry too much about the cash flow, because if you have great credit, and you've been in business for 2 years, you can pretty much get approved. Now, if you have not been in business for 2 years, from 30 days to, 1 year and 11 months, you're gonna need the cash flow. Most lenders care about cash flow over everything else. What I mean by cash flow is deposits. It doesn't really matter where the money comes from, as long as we can see deposits in the business checking account for 3 consecutive months. Now, again, I will restate that we're going to be looking for $10,000 to $15,000 in total deposits if you hit that mark, or if you've been in business much longer than 2 years and your credit is good, go ahead and apply. And I think the equipment financing option will be a great option for you. Now, the second option is going to be a business line of credit, one of my favorite tools in the business credit world. Now, with this business line of credit, well, first let me explain what it is. A business line of credit is when you get to basically take the money as you need it. So let's say you were approved for a $20,000 business line of credit. The way it works is if you only need 10,000, then you can take 10, you pay it back. Let's say you only need 5 of that 20,000. You can go ahead and take 5, then pay it back, right? So you're only gonna pay interest on what you borrow. The total line is always available to you, and then you only take what you need when you need it. This is the most flexible way of getting funding, and I love it. One of the reasons why I love it is because, of course, as you scale your business, you can use this business line of credit. You know, you get one truck, then you get another, whatever, et cetera, et cetera. So this could be used for anything. It could be used for, your truck repairs. It can be used for everyday operations or expansion, right? Or if you want to take advantage of another business opportunity, you can use this for that purpose. Now, just like the previous option, the better your personal credit, the better your loan terms will be. This will be a common theme. I'm gonna go ahead and say that right now. Depending on your business needs, this business line of credit could be the most straightforward solution to hitting those business goals. So let's talk about the requirements. And I apologize for not saying this before, but there will be a soft pull, right? They will check your credit. They're going to be looking to make sure that you do have at least a credit score above the 600 range. If that's the case, then you've hit the first mark. The second one is going to be time in business. So we do want to see that you've been in business for at least 6 months, right? 6 months with a 600 credit score or more will be a good look. Now let's talk about some realistic expectations when it comes to requirements. We do work with a lot of different lenders, right? Some lenders will want you to have just $5,000 in monthly revenue. Others will want you to have, and when I say others, I do mean most, will want you to have that $10,000 to $15,000 in monthly deposits. So if your business is low in cash or low in deposits, I should say, your credit score is going to have to be very good in order to get approved for a business line of credit. Just wanting to put that out there. But the process is very easy and you can get the funding potentially the same day. Now, the only thing you have to do is produce 3 bank statements. So it'll be this month, last month, and the month before that. Sign the DocuSign after your 15-second application and you're off to the races. Now, the third and final option is going to be a general working capital loan, right? A business loan. Now, with working capital, this just basically gives you a longer term. You can do anywhere from 6 months all the way up to a 10-year term with working capital. Now, the beautiful thing about working capital is you may have access to larger amounts of money. So if you're looking to get a 6-figure loan, working capital will most likely be your best option. Now, we're gonna keep it real. Again, we're talking about the same requirements as we spoke about before. We will want you to have been in business for 6 months, have a business checking account that we can check. And on top of that, you do wanna have some deposits, some cash flow, positive cash flow. Again, we are talking about on average around $15,000 in deposits. If you have somewhere between 10 to 15,000, you're looking good. If you got anything less than that, my friend, you will need to have great credit in order to qualify. So if you don't have great credit, you don't have any cash flow, just to be honest, your best option is going to be to work on business credit, establish your business credit, establish and rebuild and repair your personal credit. And of course, I can help with that. Another suggestion would be to start depositing money from, let's say if you do have a full-time job, or if you have cash in your personal checking account or savings account, start depositing those into your business checking account to help pad your books, basically. So that will be a good look for you. And another thing is, if you are looking for startup funding, we have options for you. If you don't have any trucks and you're looking to just get your first loan to get started, I would recommend that you have a credit score. When I say credit, I mean FICO, a FICO score, not what Credit Karma shows you. You want to have over a 680 across the board, and we can help you out. Now, one question you may be thinking is, how much cash can I get with any of these three options? Well, the best way to do this is to think about it like this. Whatever your annual gross income is for your business, you can expect to get about 10 to 15% of that amount. So if you are making 200,000, you're bringing in 200K, you can expect to receive anywhere from $20,000 to $30,000. Now, that of course grows as your business grows, but that is realistically what you can expect to receive, which is awesome. Because this is unsecured funding, so you don't even have to put up the truck. If you get in the truck, you don't have to put up any other assets, even though we do have asset-based funding as well. Now, I want you guys to remember that as you go on your journey and you're looking for business funding, most business lenders care about three things. They care about, number one, your industry or time in business, right? That's technically one, industry and time in business. The second thing they care about is gonna be cash flow. What does your deposits look like? Let me see those financial records, right? And then third is gonna be your credit, whether it be your personal credit for PG type funding or your business credit if you're looking to do no PG, which I'm gonna be honest with you, you can only get but so much money using no PG. We're talking about $10, $20, $30,000. Those are baby micro loans. If you really want to get to the bag, you're gonna need to fix your credit. Just being honest there. But as always, I hope you guys enjoyed this video, found it helpful. If you did, make sure you give a thumbs up. If you got any questions, let me know. And as always, make sure you enjoy the rest of your morning, afternoon, or evening. You guys enjoy the rest of your day. Thanks for watching.